Hi everyone, this is Michael Kramer of Mott Capital. Today is Tuesday, July 1st, and it's around 4:15 New York time. So as a quick reminder, markets will be closing in the U.S. early on Thursday, July 3rd at 1 p.m. Eastern, and will be closed all day on Friday, July 4th for the holiday. So what that means is that economic data that would have typically come on Friday, such as a job report, will now be coming a day earlier on Thursday. With that said, there isn't going to be much data on Wednesday, although we are expected to see the ADP employment report on July 2nd. We're looking for 95,000 jobs to have been created last month, and that's going to be up from 37,000 in the prior month. I would be watching revisions to last month on top of any headline number that comes out tomorrow. And then on Friday, we're going to be getting the non-farm payroll report. We're looking for 110,000 jobs to have been created in the month of June, down from 139,000 in May. Again, the revisions here will be important because this number is usually subject to revisions, and they typically are downward revisions. So this will be something to keep an eye on. The unemployment rate is expected to rise to 4.3%, up from 4.2%. It's important to note here that we have been seeing continuing claims rising more recently, and so there is a good chance that we do see this number actually increase. Average hourly earnings are expected to increase by 0.3% month over month, down from 0.4%. Year over year, 3.9% versus 3.9%. Also, we're going to be getting initial jobless claims on Thursday morning. We're looking for 240,000. Continuing claims expected to slip to 1.956 million. And then at 10 a.m., we'll be getting ISM services, looking for a 50.5 number, up from 49.9 in May. So lots of data will be coming on Thursday. And so there will be lots to pay attention to. And I would think that the job report will probably outweigh any data we get on continuing or initial jobless claims. And the services data, unless there's something really meaningfully impactful in it, I think that the will probably also will also be the lesser of the reports on Friday. But that being said, the markets are finding themselves in a precarious spot again, just because we have the job report data coming on Friday, and then of course on July 9th is the day we'll be getting news on tariffs and whether or not those are going to be, the pause is going to be delayed, or what the deal is there. The one thing to note currently with the euro is that the euro has obviously had a very strong move higher. It's continued to trend higher. That's generally been the correct call at this point. It looks like the next major level of resistance probably comes around 118.90. This area may offer a tougher level of resistance just because you can see that this has been an area of some importance going all the way back to July of 2021. In fact, it acted as resistance 2 times prior to ultimately breaking down in the fall of 2021. So this region, up as we get closer to it, could offer a meaningful level of technical resistance. It's also worth noting that we are in this overbought territory regarding the euro. You can see that it's been above the upper Bollinger Band for about 3 or 4 days now, and we've also had the RSI hovering around 75. Generally speaking, I would expect some form of consolidation to take place at this point, whether it be a minor move lower with some sort of retest of the recent breakout at 116.80, or maybe just a sideways move going into Friday and the job report, just to kind of pull it back within the Bollinger Band and maybe get that RSI down a little bit. But for right now, it looks like the euro's primary move at this point is probably to move higher still, up into around this 118.90 to 119 level. The British pound also been generally trending higher. The British pound is not in the same overbought condition as the euro is. It is touching the upper Bollinger Band, but notice the RSI is only at 66.3. It is hovering at 137.40 area. This is also an important level of resistance that goes all the way back to January of 22. So a breakout above this level obviously sets up tests at 138.30, 138.80, 139.40, but really the big level here comes at 142. So there could be a significant move coming in the pound still. Certainly when we look at the RSI, momentum has clearly broken out to the upside, and I would continue to expect to see the pound strengthening in the days ahead. And currently you can see we're well above the 10-day exponential moving average, so that is also an important level of support should we stall out. When we look at the yen has also recently broken an uptrend in momentum, suggesting that there is further room for this to strengthen. The yen isn't really in an oversold condition from a standpoint of it moving lower. You can see that we hit the lower band, but at the same time, we have further room to go on the RSI. Right here, we're looking a break of 142.40 would suggest a setup and a return back to 140.40. Again, the momentum change here suggests that we see further strengthening of the yen. And right now, it looks like we're also below the 10-day exponential moving average, suggesting that we're seeing a reversal of trend taking place and that we're likely to see the yen continue to strengthen versus the big question here is whether or not the yen will have the ability to get below this 140 level. This has obviously been the key level for the yen going all the way back to July of 2023. We've already tested it 3 different occasions. I don't know if on the 4th occasion it will result in it breaking, but again, from a momentum standpoint, it seems like there's a good chance that that's going to be at least tested again. We'll move on to gold. A couple of interesting things here to note. Notice today it closed right around the 10-day exponential moving average. Also notice when we look at the Bollinger Band, hit the 20-day moving average and failed to get through resistance. So right now I think gold is still favoring downside. You can see that our uptrend in gold has still been broken. We haven't reclaimed that uptrend. And so as long as we stay below the 10-day and the 20-day moving averages, and we stay around this resistance area around 33.25, it looks to me like we could see the gold actually continue to decline, which isn't really what one would expect if we continue to see the dollar weakening, which is what the euro, pound, and yen are kind of suggesting. But again, if we just assess this purely on a technical basis, it looks like there's a chance that that could happen. Obviously, if we get above the 10-day, if you're able to get and you're able to clear 33.80, the story begins to change, and then you can start maybe making a push back up to the highs at 34.30. But as of right now, 34.30 has really been a really strong level of resistance, and so we've already failed there 3 times. So I think it's really the onus is on the bulls at this point to prove that they can actually get it there and then push it through, because otherwise I think the momentum has clearly shifted lower. When we look at oil, I guess it's not surprising that we have found some support in the 65 area. 65, 66 has also been that really important level of support for oil going back, as we've talked about, for a very long period of time. You could go back all the way to 2018 to make that case. And so far, it still seems to be that level. You could see the 10-day exponential moving average went up sharply, now coming back down. If we were to get back above this 66, 66.5 area, get above the 10-day, we can start potentially seeing oil move back up towards 72. You can even see from an RSI perspective, the momentum to the upside clearly broke, but notice we're very close to retaking and getting back above the downtrend that was established here. So it's quite possible that we could actually see oil begin to revert, which would make sense with a dollar weakening. And so it's an interesting difference between how the charts look like when you look at gold versus oil, when you compare it to what it should be doing versus the dollar. But again, just looking at it from that perspective, support at oil in the 65, 66 region has been tremendously strong for a very long time. And I think unless we break 63.70, you have to kind of continue to respect that and potentially even look for further upside. When you look at the DAX, it's been a little bit choppy lately. You can see we had that big megaphone pattern that we were playing with back in early June. That clearly played out and actually worked. We came all the way down. We got to this area in here around 23,100. There isn't really anything in that region that would make me think that we should have stopped there. but we did. I mean, it was below the lower Bollinger Band, but again, we were also not really that oversold, but it did act as support. We came back above the 20-day. We came back above the 20-day moving average. We now have gone back below the 20-day moving average. We came back above the 10-day exponential moving average. And as of right now, we're sitting back on that 10-day exponential moving average. If you're bearish, what you want to see likely tomorrow is for us to gap lower, gap below the 10-day exponential moving average, reestablishing that potential downtrend also, and potentially establishing the fact that you're putting in lower highs. And then the next step would be to take out the lows at 23,024, because that would then establish lower lows. If you're bullish, you need to see this 10-day exponential moving average hold, and you need to see us really kind of take out this high at 24,300, and the quicker you do it, the better off you'll be. The Footsie has done basically nothing now since making that big run higher. We did form that rising wedge pattern. The rising wedge pattern did work. We did get a pullback to support at 8,700. We've now come back up to about 8,800. We're hovering below 8,800. We're hovering below the 10-day exponential moving average. And, you know, the Footsie is kind of just back to its boring self. We're going to just need to watch the 8,800 level. If that breaks out, then you can see a return to 8,890 or so. Again, when we look at copper prices, which have been a pretty good gauge in the past of where the Footsie is going and where it's been, you can see copper has certainly made a move up. And despite this move up so far, we're not really seeing the Footsie move up. But if the relationship still holds, one would expect to see the Footsie move higher given that. The NASDAQ has made a pretty strong move higher since the last time we touched base. It continued to move up. It also found itself fairly overbought. RSI got up to around 73. We were trading above the upper Bollinger Band for something like 5 days in a row. Today was the first day we closed below it. We also had the RSI hit below 66, come below 70, closing at 66. For now, right, the big test becomes is, can the 10-day exponential moving average serve as support? Can it push the NASDAQ higher? Clearly, the defining moments here in the NASDAQ were that we couldn't get it really below the 10-day. We hit the 20-day, bounced right off of it, and took off. And as long as we stay above the 10-day, it pretty much tells you which way the trend is, which is higher. If we were to start seeing us slip below the 10-day, if we were to come back below the 22,100 level, then we start talking about something different. But until that happens, I think you have to continue to favor further upside on the NASDAQ. On the S&P, it's very similar. We were overbought above the upper band. We hit 71 on the RS, 72 on the RSI. Today we came back in the band, but we're still above 70. So we're still in this overbought condition. You know, the rising wedge patterns we had mapped out here in the S&P did not work out like they did in some of the other charts in Europe. But, I mean, there is always a chance that this was a throwover, but we're going to have to see if it comes back down and actually goes back under now. Again, the 10-day exponential moving average is the big thing here, because that's been serving as support now for some time, and we're just going to have to see how that plays out. And finally, when you look at the Dow, it made a pretty big move higher the last 2 days, breaking out above this resistance level at 43,897. But now, like the S&P and the Dow, it finds itself overbought. RSI at 73, trading well above the upper band. Probably suggests that we should consolidate here for a little bit. Probably suggests that we should see maybe even a pullback. If we just draw a horizontal line from this point in time here, you can also see that we have some resistance that has formed. So again, very similar to that of the S&P and the NASDAQ. The 10-day exponential moving average will be support until it's not. And right now, there's a chance here that you could actually get the Dow to take out the old highs of 45,065, which actually made a really nice double top pattern. And we'll have to see how that kind of plays out over the next week. Anyway, that's all we're going to have for you now. Have a great week, and we'll see you next. Bye.